right? As we look now to have 1 billion transistors on a single chip, and even looking to 1 trillion transistors in a single package by the end of the decade. And unlike what Jensen might have you believe, Moore's Law is alive and well.
All right, the chip war, we're also tracking that this morning. The chip war is heating up. Intel shares, they are moving higher pre-market after announcing a new data center chip. Now, the unit is designed for high-performance computing for AI data centers and introducing an AI accelerator as well. Intel has been lagging far behind some of those chip maker competitors like Nvidia and AMD. Intel's new products, though, are they enough to take some market share from the chip giants? To break it all down, we've got Yahoo Finance reporter Dan Howley here with us, our tech DH. Dan, what do we know about this? And is it significant enough for Intel to take some market share?
Yeah, Brad, these are kind of, the announcements have largely been telegraphed. We have the Xeon 6, that's the data center chip. It's not necessarily an AI accelerator like what you would get from Nvidia or AMD. It's really an all kind of purpose chip. It's a high performance computing chip rather than something that would power, say, generative AI. That's still very good. This is something that, servers still need these kind of CPU chips. So this is a big announcement for Intel and for the industry. On the AI side of things, where all the hype is, they announced their Gaudi chip pricing, which they say is going to come in less than what you would see from Nvidia or AMD, presumably. They didn't say exactly who, just competitors vaguely. But still, the fact that you would be able to purchase a competitive chip at a price that's lower than what you would have to pay for the likes of Nvidia or AMD is important, because those chips go for tens of thousands of dollars. So those are sort of, the big deals that are coming out of Intel on the data center side. They also announced their new Lunar Lake chip. These are for consumer and commercial PCs, laptops and desktops. And they say that this is basically a chip that will be able to compete with the likes of ARM's chip line, the Qualcomm Snapdragon X Elite line. Those chips are basically designed to go ahead and rival what Apple has managed to do with its Macs, which is build power and performance. So long battery life and strong performance into a chip, something that was really lagging on the Windows side. So Qualcomm went ahead and did that with their ARM-based chip, and now Intel says they're doing the same thing. And oh, by the way, AMD also announced its own new AI accelerator roadmap, as well as chips for laptops and desktops and AI PCs.
Following in Nvidia's footsteps, Intel just unveiled new AI chips for data centers as it looks to take on rivals Nvidia and AMD in the rapidly growing AI chips market. According to Intel's CEO, Pat Gelsinger, Intel's new Xeon 6 processor will deliver better performance and power efficiency for high-intensity data center workloads as compared to its predecessor. The timing of the announcement shows how intense the AI chip race is getting, as it came 6 months after Intel launched its 5th Gen Intel Xeon processors and 2 months after announcing the Gaudi 3 processor for AI model training and deployment. In today's video, we're delving into Intel's key Computex announcements and talk about the new products that Gelsinger thinks will help turn back the tide of share losses to peers. We'll also talk about Intel stock and whether now is the time to turn bullish on the beaten-down tech player. But before we do that, if you want to keep up with Intel's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Next up, we have Intel, trading around $31 today. Where do you think this is headed and why?
Well, yeah, it has just been a tale of two worlds when you look at the chip names. Nvidia just obviously taking everything by storm, but even a company like AMD, maybe a little more direct competitor to Intel, have had a fantastic couple years. Intel has not been with the party. Their chips are just behind the game. They don't have the latest generation. They don't have the 5 nanometer, let alone the 3 nanometer chips that the AMD of the world does. They're trying to catch up, but I think this is finally a spot for them to solidify here, turn it around. They sell the most valued product in the world right now, which is computer processing chips. They were gifted by the government billions of dollars to build a new fabrication plant that's coming up in the Columbus area of Ohio. Being around that area is just like a sea of cement trucks right now. This plant is going to be massive, and they will be printing, literally printing chips coming soon, and that'll be printing money for Intel. I think this is a buying opportunity again for this company. We are going to be using these chips, even if they're not the best chips in the world, the highest technology, the best software on top of these chips like Nvidia has. People are still going to need these chips. I think this long-term prospects for Intel right here are fantastic.
We all know that Nvidia is the undisputed leader of the AI chips for data centers market, and the company's CEO, Jensen Huang, expects this growth to persist. He recently said that AI was now moving faster than Moore's law, which says the number of transistors in an integrated circuit doubles every 2 years. In Huang's view, AI is doubling every 6 months, and it's clear now that it's going to move faster than that. And we definitely agree with him on that, as generative AI is already massive, and analysts expect this market to cross the $1 trillion mark very soon. Pat Gelsinger took a direct shot at Huang's claim, which basically implied that traditional processors like Intel's are running out of steam in the age of AI. He also stressed that Intel will have a major role to play in the proliferation of AI as the leading provider of PC chips. Additionally, Gelsinger revealed that the prices of its new Gaudi AI processors are lower than that of rival chips, but made sure to point out that didn't mean that Intel would be compromising on performance. This cost advantage could guarantee Intel a significant share in the global data center market, which is expected to increase to a valuation of $622 billion by 2030 from $301 billion in 2023. Intel's share of the data center market for x86 chips has declined 5.6 percentage points over the past year to 76.4%, so new products that will help it protect its market shares are now critical for the company. Intel also revealed architecture details for its upcoming Lunar Lake processors to continue to grow the AI PC category, which are expected to start shipping in Q3 of this year. These new processors will compete against Nvidia and AMD's chips that are specifically designed for AI PCs. This is another lucrative opportunity for Intel, as the AI PCs market is expected to grow massively. In fact, according to market research firm Canalys, 19% of PCs shipped in 2024 will be AI capable, and this percentage will grow to 60% by 2027. Now let's talk about Intel stock and whether it presents a once-in-a-generation investment opportunity right now or not. Hello everyone, and welcome back to Investocracy.
So Dan, talk to me about the customer that Intel is targeting and how that differs from NVIDIA's. I know they talked a lot about enterprise customers here. Is that an area that they see a stronger use case for in terms of gaining market share from NVIDIA?
Yeah, I think really the hyperscalers are, the Microsofts, the Googles, they're all in on NVIDIA at this point. They offer competing chips as well, just because their customers want to have some kind of option when it comes to the types of chips that they may want to take advantage of when they're building out their AI platforms. But this will allow for other companies outside of hyperscalers to get into generative AI at a potentially lower price. And I think that's something that's worth acknowledging. It's not just the hyperscalers, it's not just the Microsofts, the Googles, the Amazons, the Metas, the Teslas, what have you. It's healthcare, it's individual research institutes, it's automotive industries, and so that's where we could see Intel really shine. They also, their AI accelerator chip is going to pair nicely with the Xeon 6 chip, just because they'll have the compatibility because they're from the same manufacturer. And so I think that's something that Intel also has. As far as market share goes, I mean, look, Nvidia is still the odds-on leader in the space. They know what they're doing. They've been doing it for a long time. They have the software and the hardware. They have that moat that they've built up that's going to take a while to get companies to break through. I don't think it necessarily means that we're going to see significant market share improvements from Intel, but they'll still gain some. But this isn't a knock Nvidia off its throne kind of thing by a long shot.
The thing is, Intel hasn't instilled much confidence in investors recently, with its stock tumbling 47% since 2021. The tech giant has faced multiple headwinds, including a global chip shortage, a market downturn that curbed consumer spending, increased competition that has threatened its market share in CPUs, and the end of a lucrative partnership with Apple. But there are some recent developments that indicate that Intel is starting to turn things around, so investing in the company might not be a terrible idea as it begins its restructuring. For instance, in 2023, Intel announced a complete overhaul of its business model, transitioning to a foundry-first company. The move will see Intel go up against organizations like TSMC in order to become one of the world's top chip manufacturers. Intel has plans to build at least 4 chip plants in the US for now, with recent reports showing construction is progressing on schedule for 2 locations that broke ground in 2022. Focusing on manufacturing strengthens Intel's long-term outlook, as increased interest in AI has led to skyrocketing demand for chips. However, investors should keep in mind that Intel's foundry business is currently losing money, as the company recently said that its foundry business recorded an operating loss of $7 billion in 2023 on sales of $18.9 billion. Still, Intel's focus on manufacturing is what sets it apart from rivals like Nvidia and AMD, which specialize in chip design. Intel has the unique opportunity to cash in on the boom in AI by becoming the go-to manufacturer for companies across AI. Of course, it'll take time to complete construction on its facilities and see a return on its hefty investment, but Intel could enjoy significant boosts in earnings thanks to its shift to a foundry model. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. Wall Street analysts say that Intel's earnings are expected to hit nearly $3 per share over the next 2 fiscal years. When you multiply that figure by the company's forward PE of 27, you'd get a stock price of just over $70, projecting stock growth of 133% by fiscal 2026. Of course, we should keep in mind that these estimates are entirely on analyst projections, which aren't always right. However, it would still be a worthy investment even if Intel achieves half of that growth. But what do you think about Intel stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Intel is. If you would like to know what companies like Intel have been up to these past few days, go ahead and click on the next video on your screen. See you there.